Welcome back to the Daily Crypto Roundup. And first of all, Happy New Year to everyone listening. We're officially into 2026 now. Desks are reopening, traders are filtering back in after the holiday period, and the crypto market is starting to move again in a way that actually matters. Today's episode is about getting properly up to speed, because we've got a set of fresh stories that give us a clear snapshot of where the market stands as January begins. We'll start with what the market is doing today, and why prices have moved the way they have. Then we'll go through a full run of stories covering Bitcoin, altcoins, institutions, adoption, stablecoins, and even developer activity. None of this is hype-driven. Some of it may sound a bit dry at first glance, but it's exactly this kind of information that helps you understand what sort of January we might be heading into. Before we move on, let's do the XRP giveaway update. Congratulations to today's winners. Moonhead483 and King John III are each receiving 10 XRP, and Andre Legal and Jonathan D. Wright are each receiving 5 XRP. Drop your addresses in the comments below, and please let us know if there is a memo, or whether there is not. Thanks to all of you for taking the time to comment and engage with the show. We genuinely appreciate it. And to everyone else listening, don't worry, we'll be doing more giveaways going forward, so keep getting involved in the comments. The interaction really does matter, and it helps keep this show growing as we head further into the new year. We've also seen a noticeable surge in listeners over the Christmas and New Year period, partly because we kept the show going day after day when a lot of other crypto content slowed down or stopped altogether. If you're new here and you're listening regularly but haven't hit follow yet, please do. And if you enjoy the show, a 5-star rating genuinely helps with discovery. Our goal over the next week is to push toward 300 5-star ratings as we head properly into the new year. Alright, let's start with the market itself. Crypto prices have seen a modest rebound as traders return after the holidays. But it's important to understand what kind of rebound this actually is. This isn't a wild risk-on rally. It's more of a reset. Over the Christmas period, liquidity was thin, volumes were low, and even small orders could move price more than usual. Now that more participants are back, the market is starting to behave more normally again. Looking at the top 10 coins right now, the market has pushed higher again today as momentum has picked up following the early year consolidation. Bitcoin is trading around $90,600, breaking back into strength as buyers step in and confidence improves. Ethereum is sitting near $3,160, moving higher alongside the broader market. Binance Coin is around $885, XRP is holding near $1.95, and Solana has climbed to roughly $131. Further down the list, Tron is trading around 29 cents, Cardano is close to 38 cents, and we're also seeing renewed interest in Dogecoin at around 14 cents, Chainlink near $13.20, and Polkadot at just under $2. Overall, this move reflects improving risk appetite and a return of participation, with strength appearing across both large caps and selective altcoins, rather than a single asset spike. What we're seeing today looks like cautious buying rather than aggressive chasing. People are stepping back in, but they're doing it selectively. That's why the move feels controlled rather than euphoric. This matters, because early January price action often tells you more about positioning than about conviction. Traders are probing the market, testing levels, and seeing where resistance and support really sit when liquidity improves. That leads us directly into Bitcoin. Bitcoin is trading near the upper end of its recent range, but it remains range-bound under key resistance. In simple terms, Bitcoin is trying to push higher, but it's not breaking through cleanly yet. This kind of price action is actually very typical for the start of January. After a period of consolidation, the market often needs a catalyst or a shift in sentiment to commit to a direction. There are two ways people are interpreting this. On the bullish side, some see this as constructive consolidation. The idea is that Bitcoin is holding its ground, absorbing selling pressure, and building a base for a potential move higher later in the month. On the more cautious side, others see it as a sign that demand is still tentative, and that overhead supply from previous buyers is capping rallies. What matters here is not just whether Bitcoin moves, but how it moves. A slow grind higher with volume building would suggest real participation. A quick spike followed by a sharp pullback would suggest the market isn't ready yet. For now, Bitcoin is telling us the market is awake again, but still undecided. Moving away from Bitcoin, we're also seeing selective strength in parts of the altcoin market, most notably in larger, more established names like Cardano. Cardano has outperformed on the day, but it's important to stress what this does and does not mean. This is not a full-blown altcoin season, it's rotation. In periods like this, capital often moves into specific assets rather than flooding the entire market. Traders look for coins with clear narratives, strong communities, or upcoming developments, and they allocate selectively. That's very different from the broad, speculative rallies you see later in a cycle. The fact that some altcoins are moving while others are not actually supports the idea that this is a measured market, not a reckless one. This kind of selective strength is often an early sign of capital testing risk, rather than fully embracing it. It's another indication that January is starting cautiously, rather than explosively. We are going to pause here for a quick word from our sponsors. Stay with us. Okay, let's get back into the stories. XRP is another asset that's showing early year movement. It has edged higher as 2026 positioning begins, but sentiment remains mixed and very headline-driven. It is one of those assets where price can react quickly to narrative shifts, whether that's regulatory developments, ecosystem news, or broader market moves. Right now, XRP's movement looks more like repositioning than a trend change. Traders are aware of upcoming supply events, ecosystem developments, and broader market structure, and they're adjusting exposure accordingly. The key thing to understand with XRP is that it often acts as a sentiment barometer. When optimism rises, XRP tends to respond quickly. When uncertainty creeps in, it can pull back just as fast. So far, what we're seeing fits with the broader theme of cautious re-entry, rather than aggressive speculation. Now let's move into the institutional side of today's stories, starting with Bitwise. Bitwise Asset Management has filed for 11 new crypto exchange-traded products, covering a wider range of digital assets than we've seen in previous filing waves. On the surface, this might sound like a big deal, and in the long term, it probably is. But what's interesting is the market's reaction, or rather, the lack of one. Prices didn't jump on this news. There was no immediate excitement, and that actually tells you something important. The market is no longer surprised by filings. In previous years, even the hint of a new exchange-traded product could spark a rally. Now, filings are treated as part of a longer process, not a guarantee of demand. This shows a maturing market. Investors understand that a product existing doesn't automatically mean money flows into it. Approval, timing, market conditions, and investor appetite all matter. The significance of Bitwise's move is strategic rather than immediate. It shows that asset managers are still building, still planning, and still expecting crypto to be relevant enough to justify a broad product lineup. In other words, institutions are thinking long-term, even if markets are quiet in the short term. Zooming out slightly, analysts are broadly describing the start of 2026 as a wait-and-see period for crypto markets. That phrase might not sound exciting, but it's actually accurate and useful. A wait-and-see market is one where participants are watching data, watching flows, and watching reactions before committing capital aggressively. This is typical for early January. After a volatile or uncertain end to the previous year, traders want confirmation. They want to see whether macro conditions stabilize, whether liquidity returns sustainably, and whether early moves hold. Until that happens, positioning tends to be lighter and more tactical. This kind of environment often frustrates people who want instant action, but it's also where trends quietly start to form. Now let's shift to some of the broader adoption and infrastructure stories that don't always get headline attention, but matter a lot over time. One of the more significant developments today is China's continued expansion of incentives around the digital yuan. Chinese authorities are pushing harder to increase real-world usage, including payments and wallet adoption through commercial banks. This isn't crypto in the speculative sense, but it's absolutely part of the digital asset landscape. So the question is, why does this matter? And the answer is, because it shows how seriously governments are taking digital money. Central bank digital currencies are not experiments anymore in places like China. They're moving into everyday use cases. While this doesn't directly benefit cryptocurrencies like Bitcoin or Ethereum, it does shape the broader environment in which digital assets operate. It also reinforces a key point. Governments are not stepping away from digital finance. They're building their own versions of it. And that reality influences regulation, infrastructure, and public perception across the entire sector. Another important but quieter signal today comes from stablecoins. On-chain data shows stablecoin transaction volumes picking up again as traders move capital back onto exchanges and into on-chain venues after the holidays. Stablecoins are often described as the plumbing of crypto, and that's not an exaggeration. When stablecoin activity rises, it usually means people are preparing to trade. They're moving funds into position, getting ready to deploy capital or adjusting exposure. You don't always see price react immediately, but rising stablecoin usage is often an early indicator of increasing market activity. This fits neatly with what we're seeing elsewhere: participation returning, positioning increasing, but conviction still building slowly. Finally, there's developer activity. Data from open-source repositories shows an uptick in developer commits and activity across several major blockchain projects as the holiday period ends. This is not the kind of story that moves price on the day, but it's one of the strongest long-term health indicators. Developers returning to work, shipping updates, and contributing code tells you that ecosystems are alive and progressing, regardless of short-term market sentiment. In many past cycles, periods of price consolidation have coincided with intense development work. That later supports growth. So, while this story won't trend on social media, it matters if you care about sustainability rather than speculation. Putting all of this together, today's picture is actually very coherent. The market is not panicking, but it's not euphoric either. Bitcoin is consolidating. Altcoins are moving selectively. Institutions are building quietly. Retail platforms are pushing engagement. Governments are advancing digital finance. Stablecoins are flowing again. Developers are back at work. This is what the early stage of a year often looks like. The key thing to remember is that January doesn't usually deliver answers immediately. It sets questions. Will Bitcoin break out or roll over? Will altcoin strength broaden or fade? Will institutional flows pick up meaningfully? Will narratives shift as macro data comes in? Those are the things we'll be tracking with you day by day. That's it for today's Daily Crypto Roundup. Don't forget to get your comment in for the XRP giveaway, hit follow if you're new, and please consider leaving a 5-star rating as we push toward that 300 milestone. Drop your thoughts in the comments, smash like, follow, and we will see you at the top.